Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Hey, two things at the end of this video. Number one, I had a live last night with Stock Mo, Keenan Grace, and Stocks with Josh. It was a really good live that we did. I'm going to leave a video in this corner. Actually, I'm going to leave it in this corner, so it'll be here at the end of this video. But you're also going to see a link at the end of this video up here. You probably see it now. And that's going to be to my top link below. This video will be sponsored by Stock Up University. I call it Stock Up U. It is the ultimate beginner's class. It is in beta. It's $100 off of the price right now for the early birds. So make sure you check that out. Let's get into exactly what's going on today. Today is another roller coaster day. Hey, you guys know not to fall for spam in the comments section. You know anything I say is not a suggestion for you to buy, hold, or sell, but we're just going to discuss these stocks so we can make some money, right? So it has been a roller coaster day. Let's look right at it, good people. Let's see what's going on. As we can see, the Dow is now positive. Now, this is just today. Look at this U. Look at that. It ran up this morning. Pre-markets, it was green. And then it ran green, even greener this morning. I'm making up my own words. And then it tanked. And now it's coming back. At the time of filming this, though sometimes it takes forever for it to process. I don't know. That's beyond me. It's out of my control. So we have an hour and a half before closing bell. Anything is possible, right? But the market, the bulls are fighting back. This is the Dow. We just turned positive literally just a few minutes ago. So family, you can't make this up. I finished the video, get ready to upload it, and look what happens. The Dow turns around and make yet another U-turn, and it is heading up now. The S&P is positive, and now the NASDAQ is positive with 20 minutes to go until closing bell, just to show you that anything is possible. And then now they literally change their heading. Stocks drift higher as S&P tries to snap 4-day losing streak. Live updates, okay? So that's what I wanted to show you guys. So I was ready to post and I had to come back and make an edit in this video, right? Okay, I want you guys to listen to JP Morgan, the CEO, Jamie Dimon, as he talks about a soft landing, and we'll go from there.
The 2% inflation, are you there for that?
No, I think it'll take a while. I just don't think it'll come
rates
down
longer,
long enough.
higher and longer.
Possibly, yeah.
Okay, well,
Yeah.
you know, that hurts. Will that hurt lending? Will it hurt the what you're trying to accomplish on 52nd Street in Philadelphia?
All things being, it won't do anything we were doing here. It won't change our plans at all. All things being equal, it might be slightly worse for the economy. There's still a chance for a soft landing. I mean, right. I wouldn't take that off the list of possibilities.
Now, that is actually positive for the market. Those of you that have been following Jamie Dimon, you know he is the ultimate bear. He is Mr. Gloom and Doom. He's Mr. We'll never make it. That's Jamie Dimon. And so he's sounding extremely optimistic today, even saying he went from saying there's no chance we're going to have a soft landing. We're heading into a deep recession. It's a spiral of death. Now he's saying, you know what? There's a possibility for a soft landing, right? So on yesterday, we had the Fed minutes, right? I took some notes here. We had the Fed minutes, and just about all of the participating Fed were saying that this coming March, all right, March starts next week, that we're cool with 25 basis points, right? All with the exception of two Feds, Fed Master and Fed Masters and Mastic, Fed Mastic, who spoke today, and Fed Bullard. Now, Bullard and Jamie Dimon are from the same camp. Gloom and doom. Let's go hawkish. Now, Mastic and Bullard wants us to go up 50 basis points. And they literally, one of them said we should have went up 50 basis points the last time, right? So these are the things that's weighing on the market, and we have the geopolitical situation. But this is weighing on the market more than a geopolitical situation. So the market is really shrugging off the geopolitical situation. It's the Fed, the Fed, the Fed. And I know they say don't fight the Fed, but the Fed is fighting the stock market right now because his job is to cause higher unemployment, okay? So we know inflation is the monster that just keeps looming, okay? That's why we scream at the movie screens, run, run, run. The monster's not dead. Right. So we also have March 21st and 22nd. That is the Fed meeting. All right. We know how this goes. We know the market generally jumps green before the Fed meeting. And we know the longer he talks, the more the market tanks when he does the Q&A. We know this. We know how to make money on this. We know, depending on how the market is the day before, we could play the cues, okay? You do what's best for you. Now, if you think the market is going to be green before he speaks, of course, you can play the TQQ, right? And I know some people, you got to be skilled, all right? And then you got to know when to get out. Me personally, I think it's the most dangerous time to invest, especially for most of you that's listening to me that have been in the stock market for under 3 years. Sometimes actively trading is simply sitting still. I have something else I want you guys to listen to. Listen to this.
I have all respect for Jay Powell. But the fact is we lost a little bit of control of inflation. Models didn't pick that up. I've always been suspicious of models, and when we use them extensively, I always say that you use a little bit of judgment too. And there's been a sea change. Governments are borrowing a lot of money, and you got to incorporate that in what's taking place. That means they're spending it. That's inflationary. Wages we've seen come down, but not so much.
Right.
Oil and gas will probably be going up because the investment in it has been curtailed.
Right.
And the green economy, we think it's close to $4 trillion a year of additional spending. So you're talking, and the IRA Act, which I think has a lot of good stuff in it, the Infrastructure Act, the CHICS Act, this is huge money. And so, you've had a sea change. And I think we should all get adjusted to that. We'll have more normalization of interest rates, and we'll be fine. Just remember, America's the most prosperous area on the planet. We'll be fine.
Okay, but.
So you heard him say oil and gas is probably going up. For those of you that's following me, I'm doing an option play on ticker symbol EOG, ticker symbol EOG. I'm actually up 10% on that. I got back into it. And for those of you that, that was the one that I told you guys about. And so I'm going to hold those. I got them out long. I'm going to hold them for a while. So I gave myself a couple of months to rebound just in case they don't go right up, okay? So that's the way I like to roll with these option plays, okay? So that's what I did.
Kara Murphy, Chief Investment Officer at Kestra Investment Management. Kara, great to have you with us. What's interesting about the markets is the markets have come around to the higher notion of the higher for longer part. And they've done it in stride. I mean, defending 4,000 in the face of 4% on the 10-year yield. It seems to be really strong.
I think there's a little bit of a disconnect here where the fixed income markets seem to have accepted this higher for longer narrative from the Fed, but stocks are still sort of questioning it. The rally that we had earlier this year was largely driven by low quality stocks. And then all of a sudden we had this, stronger retail sales data, better jobs data, and stocks just kind of continue to go up. We've had a little bit of a pause here, but it's still, we haven't round tripped that, sort of low quality rally that we've had so far this year. So I think stocks are still not fully digesting that more aggressive Fed line.
In terms of what you like and you don't like, right now you're staying away from commodities. So you don't think, for instance, that oil will get a revival from the China reopening?
So we had positions in commodities, energy last year, the first half of the year. It was a very effective inflation hedge. But we started to take those off in the second half of the year on the idea that inflation was starting to subside. And we think that they work really well in inflationary environments. But when you don't have inflation, they have a very spotty track record. So, there is an argument to be made that energy could catch a bid with China reopening. But if we're right and we see slower economies in the US and Europe, I think that'll offset some of that additional demand. And so it's harder to make that call on energy from here.
So we also had news that the last 3 months of growth, GDP, the last 3 months was slower than the prior month. So it seems and it appears like growth is slowing also. And just to piggyback on what she said about energy, I agree with her. That's why I'm doing short-term plays on energy. I do believe that energy will go up if the geopolitical situation intensifies. And you saw that the WTI. If the geopolitical situations ramps up, then oil is going to go back up. Not natural gas, but oil. Okay. Let me know if you see any plays that you could find in here. One of mine is ticker symbol EOG. I probably in the last 12 months, I've probably been in that. In the last 3 months, I've probably been in the same play more than 10 times. And it's just the gift that keeps on giving. Okay. You guys, let me know what you think about this economy. Again, short term, still bullish, even with today's sell off, even with these last few days, still short term bullish, long term bearish. All right. I'm going to leave it right there. Make sure you watch the guys live, but make sure you take advantage of the discount, the early bird discount. And Monday, there will be new classes. Monday will be the first classes from Stocks with Josh, as he has an entire chapter on teaching you and I how to be better at technicals and charting. All right, we're going to leave it right there. Live, love, laugh, and learn. Also, too, make sure you check out the 2 links below, Weeble and Moomoo. Moomoo and Weeble. All right, we'll see you later.